Hi, we are here to present the 27th edition of our Market Outlook and Stock Reviews. This time we have quite a few stock reviews as well as the study of the indices. The Nifty has been seesawing, trying to take out major moving averages and trying to move up. Would it sustain? Would it be able to take out 19,600 and go beyond? Or would it fall below the 19,300 mark and resume its downtrend? Let's see what the charts are foretelling us. The last week, the Nifty actually tried to cross the 50-day moving average and the 20-day moving average. However, throughout the full session week, Wednesday, Thursday and Friday, the Nifty was encapsulated by these two moving averages. Although on Friday it closed above 19,400, to be precise 19,425 that it closed. It's a good close and it is very close to that 50-day moving average, which is now located at 19,444. So initially it needs to take out 19,444, that is the 50-day moving average, and above that the trend line value of 19,510, the trend line that comes from 20 to 22. This trend line is at 19,510. So it needs to take out that and then it needs to stay above that. If it manages to stay above 19,510 for most of the week, then we can say that there is a possibility of an upswing continuing, but we would be embarking on a fresh uptrend, confirmed fresh uptrend, when the Nifty takes out 19,750. 19,750 is the Gann angle level for next week. Once the Nifty gets past that Gann angle, then we can say that yes, a fresh intermediate uptrend has taken shape and it can move up further. But prior to it crossing say 19,750, we cannot say that it is a confirmed intermediate uptrend. This is just a pullback corrective rally that is happening. Now suppose if we don't see the Nifty sustaining above say 19,450 to about 19,500, in that case expect some selling, but Nifty would weaken only if Nifty falls below 19,300. So from the daily chart we get key resistance level as 19,500, 450 to about 510, and on the downside 19,340 to 19,000 would be the initial key support area, and once that is taken out, then 19,050 would act as a major support. Even on the weekly chart, what I have studied is that it is once again 19,450 to about 19,500. That would be a strong resistance zone, and above that 19,600 would act as another hurdle for the Nifty. So till such time Nifty crosses 19,600 decisively on heavy volume based buying, we cannot expect an intermediate uptrend. On the downside, 19,300 is likely to act as a major support, and below that 19,050 to about 19,000 would be a strong support area. In between it will be even Stevens, it will be something like a range bound trading activity that is likely to continue. The Bank Nifty showed some resilience last week. So long as it doesn't cross 44,000 mark and go beyond that, we are unlikely to see major movement on the upside. At the same time, Bank Nifty, unless it falls below 4300 on a decisive manner, it is unlikely to go down in a strong way. So we are going to study the charts and tell you in detail as to what we prognosticate. The Bank Nifty shows some promise this time. The Bank Nifty on Friday started at 43,543 and thereafter posted a high of 43,908 and then finally closed at 43,820. So this is a pretty encouraging close, at least for the index that had been showing a lot of weakness so far. But since it has not crossed the 50-day moving average, which is now located at 43,964 at the end of last week, so till such time the 50-day moving average is decisively taken out, the Bank Nifty is turning weak again. Bank Nifty is likely to weaken, but this week's performance is pretty much encouraging because throughout the week the Bank Nifty never fell below the 9-day moving average. I was at least not expecting it to perform so well. Maybe there is some short covering rally, there is some rearguard action, and at least stocks like Axis Bank did show quite a bit of strength. So there are some stocks that are performing well in Bank Nifty. Bank Nifty, we would be considering that Bank Nifty is on gathering real steam when it crosses 44,000 mark. Even last week also I said the same thing, and again for the Bank Nifty to show real weakness from here, I would say that a level is 43,000. So 44,000 on the upside and 43,000 on the downside. Bank Nifty might play within the intervening 1,000 points. So again, there can be some kind of a sideways range bound activity because although even now after Bank Nifty showing such good performance, I would say that it is still a pullback rally because the double top breakdown is very, very clear, and this kind of a pullback should not we should not be jumping as to Bank Nifty is on a major recovery and it will go further up. If that happens, fine, but as of now it doesn't really show that Bank Nifty can get past the 44,000 mark. Weekly chart also shows that there is some gumption there, but weekly chart again tells us that the level of 44,000 and thereafter if further upswing happens, 44,700 would act as a major resistance. So Bank Nifty mostly range bound between 43,000 and 44,000. If it were to break down below 43,000, then only Bank Nifty will show a significant weakness. Again, once above 44,000 mark sustains there, then it would gather some strength, and only when 44,700 or 44,600 to about 700 this range is taken out, then Bank Nifty would embark on a fresh uptrend. Now we are going to review the CNXMIDCAP index. This is one index that has been performing during the week that has gone pretty well. Small cap, mid cap stocks are being quoted. There was some hesitation in large cap stocks, but small cap players had been buying once again. Would this buying momentum sustain? What is the CNXMIDCAP telling us? We are going to study the charts right now and tell you what we foresee. Retail is playing well. CNXMIDCAP has once again shown that it is still the king. Retail is acting as a major player nowadays. After the low of 27th of October, the low of 38,383, from there it climbed to a high of 47.78 on last Friday, that was 10th of November. This swing is definitely very encouraging because by posting a close at 47.33, CNXMIDCAP is already at an intermediate top. The second top that we saw when the downswing happened, that was around these levels. So if CNXMIDCAP can sustain above 40,800, it will gather real bullish strength once again. The 2 days, that is the Murat session on Sunday as well as Monday, is Sunday and Monday, these 2 dates, that is 12th and 13th of November, these 2 dates would be very crucial. If midcap doesn't correct, then there is a possibility that midcap index, once it gets past 41,350, then we have to accept that it is headed for higher levels. The midcap index would show weakness only if you see that it falls below its 9-day moving average, which is at 40,024. If 40,024 gets taken out on the downside, then we need to see if it falls below the 50-day moving average level of 39,509. 39,500 taken out, then it would show real weakness and it could then be headed for a retest of the earlier lows that happened a couple of weeks back. Now we are going to start the stock reviews. In the stock reviews, there would be quite a few stocks, and we are going to study them in adequate detail so that you can take a decision. This week in our review section, we have NTPC. NTPC once again is gaining traction. There is a bullish crossover between 9-day and 20-day moving average. Whenever this two moving averages show a bullish crossover, that is 9-day piercing the 20-day from below, and the gradients are either the shorter term, that is 9-day, is upsloping, and the 20-day either flat or upsloping. That means there is some bullishness, at least in the short term, and the NTPC stock is going to move up. It's performing really well. And its results that were published on 27th of October, that had been pretty good. It is showing a lot of traction. People are getting into NTPC. People are getting bullish on NTPC. NTPC in the interim can move up to 245 to 250. Once NTPC takes out 251.50 high posted on 3rd of October, it will be headed for 260, where there is a Fibonacci level, as you can see on the chart, accompanying chart. If it manages to stay above 260, then 275 to about 283 would be the next targets for NTPC. NTPC looks bullish. Our second review stock is Bata. Bata India, the shoemaker. The footwear giant Bata. The primary reason behind choosing Bata as a review stock is that if you look at the daily chart that is on your screen, it has started moving up from early April, and then it posted a high on 8th of August at 1771.45, and after that Bata started correcting. Initial correction had been pretty sharp. In 3 days it lost a lot of ground, pierced three moving averages, three supporting moving averages, 9-day, 20-day and 50-day moving average. It bounced back to almost post a new high, and after that Bata started correcting again. And Bata has been correcting only as late as last Thursday. Bata posted a low of 1530, which is the 0.618 times Fibonacci support area, Fibonacci support level. That also you can see on the screen, the light green line that shows that 1530.65 was the Fibonacci support level of 0.618 times. My feeling is that in most cases, if a stock is going to go up, in that case the stock actually completes its correction around, say, 0.618 times retracement. That is roughly above 60% retracement. In case it caves in, then that will be signaled only when the 1520, the Bollinger Band, lower Bollinger Band level, if that gets taken out, then this stock Bata can come down to 0.786, that is 1465 to about 1450 on the Ganangle line. But looking at the kind of trading that has been happening over the last 10 trading sessions, when it was actually trading between 1530 and 1575, or a little higher than that, 1580-85 kind of range. So this 50-point range was giving a lot of good support, and Bata did test its 50-day moving average on last Thursday, and of course it closed below both 50-day and 20-day moving averages. My gut feel says that Bata's correction is getting over, because unlike other stocks which have actually posted a high in September, Bata posted its high in August, and it has already had almost a 3-month-old correction. So Bata can once again start moving up. If it were to move up, then you will see that it needs to take out 1600 to about 1630 kind of levels, where the 200-day exponential moving average is located, and after that 1645 is the Ganangle line that was resisting it for the last 3 months. That Ganangle needs to be taken out, and once it does that, it can move up. So only reason that I have chosen Bata this time is because Bata can bounce back, and Bata is a good stock. If the market were to turn adverse, say selling pressure comes in, Bata may not fall much, but Bata can give you a good upside, a reasonably good upside. I would say that it might retest its earlier high of around 1750 going forward, say over the next 3 to 6 months. With that kind of an understanding, I have reviewed Bata. My third review chart is Siemens. Siemens had been rising. The chart that you see is the weekly chart, and you can jolly well see that Siemens had been on an uptrend for the last four years. It is in its 5th year of, only in 2020 during COVID it came down from 1500 to about 1000 kind of levels. That was the only time it saw a fall, but otherwise roughly around May-June 2020 till current date, but Siemens had been on a tear, and it has been moving up. This uptrend, I wouldn't say it is already over, because the intermediate downtrend that we have seen for the last 8 or 9 weeks, we have seen long hammer line at the bottom, right from the 50-week moving average, that was week before last, and the last week it's closed at 3407. My feeling is that this was a much needed correction in Siemens. Siemens is actually showing good traction, and Siemens is ripe for a fresh rally, because on the weekly chart, the 14 RSI has closed at 43.63, while the low was slightly lower, around 41.79. So RSI is not overbought, and neither is the stock not corrected. It has corrected adequately, in the sense that it has broken the 9-week, 20-week and 50-week moving averages, and trying to post a pullback, or trying to post a recovery rally. That recovery rally is likely to take shape. That's what I tend to think. So Siemens that way has been on a bull run, and its bull run is likely to continue. At least the weekly chart is giving ample indication to that effect. Only if Siemens falls below, say, 3000 mark, then it would become really weak. Otherwise, Siemens would retain its potential to move further up, whatever kind of correction that happens, because Siemens has shown that it has the ability to move up. Now, if you like my presentation, then please press the like button, subscribe to my channel, and please share it among your friends, acquaintances. Share it with others on social media. Don't forget to press the bell button so that you get the recommendation or the notifications from YouTube. Our sole recommendation this week is NMDC, and the chart that you see is the chart that tracks data, price data from 2008 to current date. It's the monthly chart, you can guess easily. The monthly chart shows one very particular thing, the reason behind giving NMDC a buy call. NMDC is a buy. The monthly chart shows that right since 2015, or even before that, late 2014 till about current date, or till about couple of weeks back, it has been trading between, say, 150 on the upside and 50 on the downside. So within that 100-point range, NMDC languished for several years, more than 8 years, I would say. Now this stock is getting the real gumption to push further up, and it would be a good uptrend from here on. This is a PSU, but this has got one of the best promises. Currently, when most of the stocks are at their highs or correcting, NTPC, after completing its accumulation phase, is just about getting to break out the immediate resistance levels around 178 and then 200. My guess is that over a period of 1 year, it might move to something like 214 to about 238. These are Fibonacci levels, as you can see on the chart itself. But ultimately, this kind of 8-year hiatus where the stock absorbed most of the supplies and then scaling up, it is headed for 300 to 320 kind of levels. So that's a doubler. It is NMDC which is going to do a similar kind of upward trajectory, is likely to pan out for itself. The monthly chart gives us a lot of confidence that accumulation is almost through, and the volume figures of the last 4 months shows that volume is increasing and people are buying. So This is one of the most bullish stocks from a technical point of view, and if you are willing to give it some time, that is 2 to 3 years, it is going to reward you handsomely. At least that is the likely possibility.